All right, welcome back. Today, we're going to go on a little journey. Think of it as a roadmap for anyone who's ever had that light bulb moment and thought, hey, could this actually be a business? We're covering the whole thing, from that first spark of an idea all the way to ringing the opening bell on the stock market. So, you ever find yourself sitting in a lecture or maybe working on a project and you think to yourself, you know what? I could build this so much better. If that's you, then you're in the right place. We're going to break down all the must-know steps for any aspiring founder. So let's start at the very beginning with the idea itself. You know, every single great company, whether it's the little chai shop down the street or a massive tech giant, it all starts with one simple question. Why are we even doing this? What's our point? And this isn't just some deep philosophical question. It's a strategic one. It's the North Star that guides every single decision you'll make later on. This core mission is what economists like to call the theory of the firm. But let's make that simpler. Just think of it like choosing what game you and your company are going to play. Are you playing to get the highest score, meaning the most profit? Or are you playing to take over the whole board? Let's break down the three main games a company can play. First up, you've got the classic, the OG goal, profit maximization. It's super straightforward. Every single move you make is judged by one thing. Does this make us more money? The whole point is to make that gap between what you earn and what you spend as wide as humanly possible. Now, this next one is really interesting because it flips the script a little. With sales revenue maximization, the goal is total domination. Just think about the early days of any of those food delivery apps. They weren't making a profit, right? They were losing money on every order, but they were in an all-out war to get the most users and become the biggest name out there. They were playing the long game, sacrifice profits now to build an empire later.
And then there's this third theory, which is, well, it's pretty human. Sometimes the goal isn't just about the company's bottom line, it's about the people in charge. This is where managers might start prioritizing things that make them look and feel good. You know, the fancy corner office, first-class flights, a huge team. As long as the shareholders are getting just enough profit to stay happy, these perks can actually become the real goal.
Okay, so you've figured out your mission. You know what game you're playing. Now you need a blueprint. What is your company actually going to look like on paper? This step is absolutely critical because it affects everything: how you get taxed, whether your personal assets are at risk, and how you can raise money. So let's check out the options.
The simplest way to start is the sole proprietorship. It's just you. You, your idea, and your business are all legally the same thing. The good news? You get to keep all the profits. The bad news, and trust me, this is a big one, you're also personally on the hook for 100% of the debts.
Now, what if you don't want to go it alone? Well, you can team up and form a partnership. This is great because you can pool your money, your skills, your connections with other people. You share the workload, you share the profits, but, and you probably see this coming, just like with the sole proprietorship, you also share that unlimited personal liability. Now, for those of you thinking really big, there's the joint stock company, which we all just call a corporation. And this, my friends, is a complete game changer. Why? Because the company becomes its own person in the eyes of the law. It's totally separate from you, the owner, and that separation is everything, as you're about to see. Okay, this table breaks it down perfectly. Just look at that very first row, liability. For the first two, it's unlimited. That means if the business fails, they can come after your house, your car, your savings. But look at the joint stock company, limited. That one word is the magic right there. It means your personal stuff is safe. That's a huge deal. So you might be wondering, okay, is there something in between? Can I get that awesome protection of a corporation without all the crazy paperwork and complexity? And for a lot of modern startups, the answer is a big yes. It's called the Limited Liability Company, or LLC. There is a reason the LLC is so popular. First, you get that all-important limited liability we just talked about. Your personal assets are safe. But the taxation is way simpler, more like a partnership. It's flexible, it's protective. Honestly, it's the perfect sweet spot for most new companies today. All right, so let's recap. You've got your mission, you've got your legal blueprint, but even the most amazing car in the world isn't going anywhere without fuel. In the business world, that fuel is capital. We're talking money. So how do you get it? Well, you can think of it like there are two main roads to get that funding. There's the traditional road with old school methods like bank loans. And then there's the startup highway. This is all about high-octane growth and bringing in outside investors who want a piece of the action. First, let's quickly touch on those traditional paths. I mean, before venture capital and Shark Tank were even a thing, this is how companies got funded for decades, and these methods are still super relevant today.
It really boils down to two basic choices. You can either sell off little slices of your company, that's called issuing shares, or you can just borrow money that you promise to pay back later, with interest. One means giving up some ownership, the other means taking on debt.
Okay, now for the really exciting part, especially if you've got a killer tech idea. Let's dive into the fast-paced, high-stakes world of startup finance. This is where it's all about explosive growth. First up, venture capital, or VCs. These are the pros. They're professional investment firms, and they're not just looking for a nice little business. They're hunting for unicorns, the next huge thing. They're looking for an idea that can grow 100x. They'll write you a massive check, but in return, they want a chunk of your company and a seat at the table to help make decisions. But before you even get to the VCs, you might meet an angel investor. These are wealthy individuals who are investing their own personal cash into your dream. They usually come in super early, when your idea might just be a prototype or even a PowerPoint deck. They're called angels because they take a huge risk on you when nobody else will. And frankly, their advice and connections can be even more valuable than their check.
And that brings us to the grand finale for many successful startups, the IPO. An initial public offering is when your private company finally goes public. It's the first time that anyone, you, me, anyone, can buy its stock on a stock exchange. It's how the company raises a ton of money, and it's also the big payday for the founders and early investors. It's the major leagues.
So there you have it, the mission, the blueprint, and the fuel. That's the crash course on how you can take an idea from just a thought in your head all the way to a public company. The journey is definitely complex, but the path is pretty clear. You've got the essentials now, so the only question left is, what are you going to build?